Asia is likely to be the bright spot in the world in 2023. That's the word coming in from the Asia-Pacific chief economist of S&P Ratings, Kuijs. Amid worries of inflation, rising rates, currency crisis and eventual recession, Kuijs's report seems like a breath of fresh air. So we start our series of Outlook 2023 with him. He's with us in the studio. Louis, thank you very much indeed for joining us. Okay, so why are you bullish on Asia? What's going right?
Well, I think, when you look at the Asian economies, there tends to be quite a bit of trend growth. Like the underlying pace of growth is just simply higher in Asia than it is in Europe and the US, especially compared to Europe. Mm-hmm. Why is that? We still have catch up, right? We are still catching up to higher income levels. And we have good domestic demand stories. We still have, countries that grow in terms of population. So these are factors that help.
Yeah, demography helps. But is one of your reasons why you see positive Asian growth an assumption that China will recover?
The China story helps. China will be an outlier in terms of when we look at the very big economies in the world, the US, Europe and China. The US and Europe, we don't expect any growth next year. In China, we actually expect growth to pick up, and that will help China itself, but it will also help the other Asian economies.
Okay, because those that are in trade relations with
That's right.
Asia.
Yeah.
Now, let's come to India in that case. We do have, of course, we will be impacted by Asian growth, but we are also dependent on global growth. So, how does the medley look? How does the mosaic look for India? How much may we manage in terms of growth?
Yeah, so as you say, India exports to the West, it also exports to the rest of Asia, so it is impacted by both. Of course, India is also an economy where domestic demand is very important, and that is helping you when the world is going through a rough patch. And if you look, if you put everything together for the world, we see growth slowing quite a bit next year, but because there is that nice domestic demand story in India, that helps creating a buffer. So we expect growth to slow in 2023, the fiscal year ending March 2024, but not to an extent that we see in some of the more export-oriented economies in Asia, like, say, South Korea or Taiwan. Fair
enough. I think your expectation is 7% this year and 8% next year. 6% next year. So we go from 8 to 7 to 6 as far as GDP growth is concerned. But, you just spoke about India exporting to the world. We run a current account deficit, and it could be even above 3% of the GDP this year. Will that be a worry? This year we worried a lot about our currency. Will that persist next year?
That is one of the, I wouldn't call it pain points, but it is something that we look at. Because until recently, if you look at India, but there are other economies, the Philippines, South Korea, the Asian economies had done a lot of good homework in preparing themselves better for the next time that we get, pressure from US interest rates rising.
So pressure is accumulating reserves?
The pressure is like the higher interest rates in the US that are drawing capital.
How do you say they prepared? Because they accumulated reserves?
So they prepared by accumulating reserves, also by borrowing less in US dollars, more in their domestic currencies, by allowing their currencies to weaken rather than, fight the weakening by using up your reserves. So quite a few improvements that these Asian economies, including India, have gone through. But then, unfortunately, the Ukraine crisis pushed up energy prices, and at the same time, the domestic demand story is like pulling in quite a lot of imports. So now we have current account deficits, and I wouldn't call it a alarmist kind of a worry for India, because at the moment it is quite easy to finance it from abroad, but it is something that you don't want to see becoming too large, that external deficit.
Okay, so you would expect that we can get much weaker than the exchange rate now is. We are running at almost 83 rupees to a dollar. Can it get much weaker before it strengthens?
It is, at the moment, I would not want to be overly sanguine in terms of that pressure coming from the US Fed. I know the markets in the US are at the moment quite comfortable, and they expect the US interest rate to not go up that much more and to also come down quite quickly after they pushed it up. We are a little cautious on that because the fight in the US with regard to inflation is not over at all. Unemployment is very, very low. Wage growth is going along quite rapidly. So I wouldn't want to be too sanguine as concerns that pressure on the foreign exchange markets in India and other economies. So I would, I wouldn't want to be too sanguine as to that pressure.
So there can be some pressures on the currency. We may have a battle or two to fight. Can you just elaborate a little bit more on what you expect from the US? Because a CPI number is due today. A Fed meeting is lined up later on in the week. What is S&P Ratings' view?
So our view is not that far off from the market at the moment in terms of where we think the policy rate will end up, above 5%. But we don't expect it to come down so quickly. If you look at what the market expects, they expect a Goldilocks kind of scenario where the Fed will pretty soon conquer inflation and then can reduce the policy rate. We expect it to be more sticky because we expect inflation to be more sticky. Nobody doubts that inflation in the US will come down. The question is, will it come down fast or will it be a more drawn out process as firms are passing on cost increases, workers demand higher wages? We think it's going to be a bit more drawn out.
Okay. Well, let me come back to India. I noticed that, as you said, the GDP forecasts are falling from 8 last year to 7 this year. That's calendar 2022 to 6 in calendar 2023. But then you go to a 6.9 or almost 7% in 2024. What's that optimism based on? Is it geopolitical? Is it that the world will not want to invest in China and so we get a part of the cake? What is this optimism based on?
So I would say it's a combination of structural factors and changes that are taking place. If you look at the structural side, India, the overall saving rate in India's economy is nowadays sufficient for the country to have trend growth of around 7% or so. That was not the case 15 years ago, but fortunately is the case now, so that really helps. Of course, you have cycles going on, cycles in the global economy, also cycles that are caused by the RBI needing to tighten monetary policy. On that front, things should look a little better in 2024 because we expect the RBI to have started to ease its policy. At the same time, in 2024, we expect a return to some modest growth in the US and Europe. So these are some of the factors that help. When we think about the geopolitical issues and the possible changes in supply chains, I would not expect this to suddenly change the landscape overnight. But we do see that there is increased interest internationally in investing in India, whether it is because of political reasons or whether it is because of risk management types of reasons, or whether it is because of the rapid growth of India's own market. So there is, all in all, a greater interest, I would say, internationally to invest in India.
Okay. Can you parse for us how you see China recovering or not recovering? Do you see an end to this serious lockdowns? Just describe your trends in China for 2023-24.
Yes. So, this year we've seen China disappointing heavily on economic growth because basically the government decided that we find that health aspect more important than the economy, so we don't really care what's happening to the economy. We lock down people, we restrict mobility, we do mass testing all the time. We have seen, since the last 5 weeks or so, a change in that stance, and actually the developments at the moment are going quite fast. Every day we get new news about measures being lifted. So we see that COVID stance and what it will mean for the economy changing quite a bit. This will not mean that there will not be problems in the coming months. There's going to be hiccups and teething issues in the same way as we've seen in other economies. But for 2023 as a whole, this will help. There's a second reason why we are a bit more optimistic on growth. China changed its property policies. Yes. China had its property developers in a stranglehold financially.
Yes,
Banks
all
were not
through this
allowed. Banks were not allowed to lend to them. That has also changed, and so these two factors should, in our view, help growth in China to pick up next year.
Okay. Well, I want to dwell a little more on India. You know, we're very happy with the 6.9% growth for the fiscal year, April-March. Most economists are standing, the Reserve Bank stands at 6.97%. But while 7% is good per se in this world, if we measure it from March of 2020, the economy over 3 years has grown barely 10%. That gives us a CAGR of 3% or thereabouts. If you compare countries in terms of their scarring or otherwise from 2020, where does India figure in the pecking order?
Yes, that's a good question because, you know, India is a country where the underlying pace of growth is quite high, right? And so if then you don't have growth for a year, that suddenly opens up a big gap. So we see actually when we look at this in the APAC region, we see that the biggest scarring, like where are you now compared to where you could have been if everything had gone according to plan, then the scarring is quite high. It's about 10% or so between, like, you know, more than 10% in India. It's even higher in the Philippines, another rapidly growing economy that basically was, you know, suspended for quite some time. So we see that scarring, especially high in the normally rapidly growing economies, whereas if you look at, say, Japan or Singapore, the scarring is smaller.
Okay. So that's why the numbers of 6.9 and 7 aren't impressing us. But do you think beyond 24, India can sustain a 7% growth?
Should be. Should be possible. I mean, you know, India, I think, at the moment has a relatively sensible macroeconomic setting. People in the government and the RBI would take measures, I think, if the current account deficit becomes too large, or
yes,
as we see if, you know, the governor is pointing to core inflation and the need to bring that down. So I think as long as the macro policy setting continues to be safe and have some buffers in place, it should be possible for India to continue to grow at 7%.
Okay, we'll have to end our conversation on that. Louis Kuijs, it was a pleasure speaking with you. Thank you very much for dropping in the studio and kicking off our series on Outlook 2023. The key takeaways are very positive. Asia likely to be the bright spot in the world in 2023, and India chiming in with a 6% growth. It may be disappointing compared to the 7% that we did this year, but it would still be one of the fastest growing countries in 2023. And thereafter, Louis expects possibly a 6.97% growth thereafter, based on, of course, domestic savings, as well as a slightly more benign global investment climate. We wrap up on Bazaar on that note. Chartbusters is lined up next.